Yes. Thanks.
Temperatures up, shares down. Ben has the latest.
Yeah, hello to you both. Morning, because there's been big falls in the markets yesterday and right around the world, because that's had a huge knock-on effect for the value of our investments too. Well, back in March, there were celebrations in the city, the FTSE 100. That's our 100 biggest businesses. That broke through the 7,000 level for the first time. 6 months later, well, we're hitting new lows. So what happened? Well, the big change is China. Remember, it's the world's second largest economy. It's been slowing down pretty sharply, and some experts say the country might actually be fiddling the numbers on how well its economy is doing. Here's the head of the city regulator.
I think China is going through a very, very significant slowdown. There's been 6 years of essentially credit-driven, investment-driven growth, but that has come to an end. There has been overinvestment in the real estate sector, particularly outside the major cities, huge expansion in debt levels of local governments and state-owned industries. And I think that that really has come to an end. And I think what is going on at the moment is that in the industrial sectors of the economy, they may actually be in a recession. And the official figures, which suggest that there is 7% growth, I think are simply not credible.
So that's Lord Adair Turner. Well, Micah Curry is from the investment firm Fidelity. She's with me this morning. Micah, good to see you. We've touched on China being the big driver of all of this, that markets are falling. Why? What's happened in China?
Well, if China coughs, the world really catches a cold. China has been a big consumer of commodities, and as this economy's growth slows, this has a knock-on effect. Now, you mentioned the FTSE 100. A quarter of the companies in the FTSE 100 are oil and mining companies, so they are particularly vulnerable to what's happening in China.
Now, if we look at what's happened to stock markets, I mean, the FTSE 100, this is just in the last week alone. We can see over in London, in the United States, Japan, and of course there in China, the Chinese market down by 11%. And they've been trying to rectify that. They've devalued their currency quite a lot. But then that sparks fears that other countries could do the same, and it's an all-out currency war to try and make their products cheaper, more attractive around the world. It's hard to know where that ends, who blinks first.
There are concerns, because if China weakens its currency, its exports become cheaper, and of course that's got a knock-on effect on its competitors, and that pushes prices down. And we've had worries about deflation, about prices being too low. But it's important to remember that the Chinese economy is changing. It's been focused on exports, it's been focused on internal investment. Now the focus is shifting to the domestic consumer, and the fact that that should drive growth in China.
So what does it mean if you have any sort of pension, any investment here in the UK? It's easy to think that China's a long way away and it doesn't affect us. But clearly, as we can see from the markets there, it's having an effect on the value of the FTSE 100 and other things. I'd imagine that there are blips like this. It was Greece we were worried about, now it's China. I mean, is this the message that you're in this for the long term and these things generally iron out?
Absolutely. Investing is a long-term game, especially if you invest in your pension. There will be short-term ups and downs. That's completely normal. The thing is to hold your nerve. Now, what does it mean for your pension? A lot of pension companies, a lot of funds invest in these FTSE 100 companies because they pay incomes. The companies like BP, Shell, Glaxo. And if these share prices are suffering, there is a concern that this might have a knock-on effect on dividend payments. Now, there is a silver lining, and that is the fact that a lot of these companies report their earnings and pay their dividends in US dollars, and we know the US dollar has been on an absolute tear.
Yeah, one we'll watch very closely. Micah, thanks so much. Micah Curry there from Fidelity. It's certainly worth watching. We'll keep an eye on what happens with those markets when they open, certainly in London at 8 o'clock. More from me a little later.
Thanks, Ben. We'll see you then.